So, um, I think what I'm going to do, guys, is I know we had the poll going about the chart settings, chart layouts, workspace environment, things like that. I think what I'm going to do is I'm going to just do a video, and I've done this in the past, but I think I'm going to be a little more detailed with it. I'm going to do a video that's basically going to give you chart by chart. I'm going to go into detail on each one of the charts, like the 60 range, the 24 range, 12 range, and the 4 range. I'm just going to show you, going into detail. We'll talk about the chart settings and what you need, each one of the charts, pretty much. I mean, you know, I guess you can use the same charts as I have, as far as like the workspace environment, the chart settings, whatever the case is. The only thing is like the disco trading, volume profile, that range volume profile. There's a lot of there's certain settings that you're gonna have to turn off, or not turn on, turn off, but make adjustments to. I guess people, I don't want to see individuals kind of get so, I guess, involved with mirroring the same charts that I actually use. So what I'll do is that if you choose to kind of trade in the same charts, I just thought about it, and I see some people, it's about a 50-50 interest type thing. Some people don't really, may not have interest in the actual chart settings because they trade their own charts. They have their own settings, whatever the case is, and maybe they're tweaking it around some of my settings, whatever the case is. But what I've chosen to do is just do a video showing you the chart settings, or going back over the chart settings again, and I can show you the chart settings or the volume profile settings that I have my volume profile set to, or the disco trading volume profile set to, that I have loaded to my charts. I can show you just everything as a whole, and I'll do that. We'll go through the 60 range, the 24 range, the 12, and then the 4 range. I'll do a video. So I'm not going to go about charging a fee just for the chart settings and the workspace environment. I just said, I'm just going to put it out there in a video and let you guys choose if you want to be able to kind of mirror the same settings, or mirror the same settings when it comes to chart settings, and the layout and into the volume profile settings as well. Because really, honestly, all I use is just, I follow pure price action, and I use volume profile to kind of help me with my trading, or whatever the case is. And that's pretty much it, though. I'm just going to do a video surrounding that to make it short, sweet, and simple for everybody. If you choose to use the same settings, you can. If not, that's fine. Because maybe you trade the way maybe you have your own settings and a setup. Maybe you're using a different, maybe not using 60 range charts. Maybe you're using the same strategy, but maybe you're using time-based charts, whatever the case is, or volume-based charts, or tick-based charts, or whatever it is, or wrinkle-style charts. It doesn't matter, but maybe you're just using the same strategy. So, for all those that are maybe wanting to replicate what I have, the video will probably be more so for you guys, and I'll go into the settings more so in detail, chart by chart, including the volume profile as well. So I'll just leave it like that, okay? We'll do that, and not set up anything where I kind of thought about it. I said, I'm not going to do that. It's just, I just, it's part of the trading community here on the channel. I'm just going to make a video just covering that information. So I'm not even going to put it into a file to where you can, just upload it to your folders, whatever the case is. And I think a video surrounding it to where you can have a step-by-step guide and look at the actual settings themselves for each chart, which is basically, I'll go in detail about that. We'll walk through each chart, show the chart settings, and volume profile. If you have any questions about any of the settings, you can always send me an email. Not email, but leave me a comment or whatever the case is on the channel. And I don't have the emails, set up because I don't have the time to be answering the emails all day long, guys. I know that I'll get millions of emails, and I'm making these videos for free. They're more for informational type, more information than anything. I just wanted to put the content out there. Like I said, it was never my idea of making these videos public, as far as making it public to where people would comment or respond to, because you guys know even at first I had comments turned off. I wasn't interested in, that type thing of building so much of communities surrounding my style of trading. Was more so me wanting to record trades or put them in a workspace environment or cloud-based environment to where I can go back to and easily access them easily. So then I turned the videos on to be public, and I think that's when people started getting interested in the way or style I trade. So it is what it is. At this point here, yeah, it'd be nice to see the channel grow, and I'm glad to see because I get tons of comments and feedback people from individuals on the channel saying that they're um, learned a lot and continue to learn, and they're practicing using the strategy. And a lot of people say that I'm green. I've been green for a week now, whatever the case is, and I'm glad to hear that, because that's the key. Is being green every day. It's not being green one day, red the next day, green the next day. Back and forth, back and forth. I think if you take this seriously and you are a straight up professional, not professional, but you become experienced, you should be, um, you know, um, profiting every day. I mean, this is a business. If you treat it as a business, some people maybe have another means of income, whatever the case is, and they're like, okay, well, yep, today was a bad day. Didn't make any money or lost money. Tomorrow's another day. I don't take it. I don't. I don't look at it from that standpoint at all. Okay, so I hope you guys understand that. All right, hey guys, welcome back to the channel. This is Future Trading with Mike, and once again, we're looking at the ES. That's the Emini. E-mini S&P 500 futures, guys. So this is the live recorded session today. Taking a look here at this particular market. Looks like my volume profile didn't load for the 20-foot range chart, but I appreciate everyone tuning in this morning. I am a little late trading this morning, of course. It is 10:48 right now, so I'm getting a little late started looking at my charts this morning. Had things that I need to take care of, but either way. Let's go ahead and jump into the video. Yeah, today's the 12th of May, Thursday morning here, and we'll see if we can take a few trades. I always like to start off by taking a look at the 60 range chart, and let's see what the market kind of did overnight. Everyone that's been following the market's been making lower lows and lower highs for over a month now, pretty much. I mean, we've been just pushing to the downside, but that's got a lot to do with things that are going on in the economy, and there's a lot of different things going on, guys. There's so much going on, inflation and interest rates and global stuff that's going on that's impacting here in this country. And but I try not to get too wrapped up in all the new stuff. I just kind of I follow the economic stuff, of course, because it has a major impact. Um, um, Even in the trading markets, it affects all markets, but definitely, the trading markets, whatever the case is. So, with expectation that the market hopefully will get better in the near future. It may not be the near future; it could be a little longer than that. But, things are definitely impacting the markets. I'll say that. Um, so, let's see here. So yesterday we traded pretty much inside of I guess Tuesday's trading session, and then we broke down towards the close of yesterday, made a low here, and kind of just chopped around, pulled back, and then pushed lower. Overnight we kept making lower lows and lower highs, as you can see that, and now we're actually pulling back to an area. Let's see here. That's price tapping to it. Yes, an area of actual supply sitting right here in this area right here. So this is a pullback to an area of supply, and you see price bouncing right here, right above this high volume area here. So I trade. I don't trade probably like most people try to trade. A lot of people take breakout trades and look for price to break below a high volume area, there's a low volume area below it, and then they just flush the market or whatever, they're taking the market short, whatever the case is. If the market starts to, move quickly to the downside, I don't use that style of trading. I look for more confirmation in my style of trading. So I just don't jump into a trade, guys. If I see it, I don't chase a trade. I never chase trades. I always try to look for confirmation, wait for the retracement, see if there's going to be rejection, and then I take my entry. Okay. So there's a certain definitely a certain style or strategy that I use that gives me more confirmation and comfortability when in trading. So and that's what prevents me from having major drawdowns on my with my style of trading. I know where to get in, I know where to get out of, even though it's scalping, and even though I may miss some, but I'm able to, um, I guess, if you want to say accurately or whatever, I know where to get into the market, and I know where to get out of it. I know where I should get out of it if the market comes back against me, whatever the case is, and that's all surrounding my point of entry and typically a area of small swing of resistance, small swing of support. If I'm selling, small swing of resistance where I took the entry from, and I'm going long a small area of support where I entered the market to on a buy position. So I'll show that here in this video here. More so, what to do if you have I guess one, have a losing trade. What are some things that are really causing you to have a really as a future trader have a losing trade. And I mean that could be just simply not having a solid strategy to trade off of, whatever the case is. But taking major drawdown, staying in a trade where you should already been out of a trade at, that's a major no-no. That's how I have this thing, I always say this, I've said this in many videos, you should be green every day. I'm not saying you may not have a losing trade in your trading session, but you should be green each and every day. Okay, as you see, I show you each time I trade, my accumulation of ticks throughout the day or throughout the session, whatever the case is. And I don't have, I have losing trades. I have trades where they come close to it. I break even, whatever the case is. But I don't sit in a trade and take that drawdown, guys. That's just ridiculous. They take massive drawdowns, thousands of dollars, whatever the case is. Because then at the end of the day, end of the night, when you go to lay your head down, you got to worry about that. How you gonna make that back up at the end of the week? It's just too much of a headache. So why not, know where to get out at the moment you get in at. Know where to exit at. When as far as profit target wise, the moment you get in at. And that's why you see me always show you right when I get into a trade what price is going to go to, or I say if price comes back here, I got to get out. And I do because I know the movement. Well, you study price action enough, and I'm a pure price action trader. Okay, I don't use all these technical analysis. I'm not all these different indicators and to get in and out of trades, whatever the case is, X crosses Z and all. I don't do stuff like that, guys. I'm on a red light, green light trader. I primarily am a price action trader. And you ask anybody, I started off price action trading on a pure naked chart. And purely today, all I have on my chart is just price and volume. That's it, and I can trade purely from that because I am a supply and demand style trader. If you do not know about supply and demand style trader, I highly recommend you learn or, kind of do your homework about it, because it is the most, to me, and you can ask probably many other traders who trade the same in a similar way, one of the most powerful ways of trading, because you're getting into the move where the move actually happens. So here, what do you see here? Price push down, pull back, lots of selling took place out of the swing, right? That's aggressive selling. So naturally speaking, when price comes back to it, as it did right here, it's going to probably reject because there's a lot of selling that took place here. There's a lot of sell orders that were placed here. And the only way to push through that is to force these these traders that put all these sell orders on, to flush them out of the market, is to pretty much scare them out of the market. Use a scare tactic to basically get them out the market, whatever the case is. In doing so, they have to buy back, they have to buy contracts to exit out of their positions, which would force the market to push up, whatever the case is. But I look for areas of supply and demand. So there's a game that is to be played here when it comes to trading. And I've been trading for a number of years to know, like the last couple of nights, I showed you guys a few trades that I got into after the session opened. Once the market closes daily, it opens into the global X session or the evening session. And I know certain things that happen towards the end of the close. That's why I don't trade typically like after 3:30, because there's a lot of volatility going on. There's a lot of transactions that are going on in the market towards the close. And when I start to see certain things happen in the market, like towards the end of the close, and the market is rallying back to the upside, with lots of force, I say, okay, well, that's the market makers probably trying to buy the market back up, push the market back higher to a certain extent to flush the market. So that which means they have to buy, that they're buying and they are forcing sellers who jump into the market. They're forcing them out, and they're basically shopping for stops just to turn the market back around to push the market back lower. That's what happens probably 99% of the time, guys. The market's going to stop somewhere where there's a lot of selling that took place to where the market makers are just ready. They don't want to eat or carry on the cost of doing business and pushing through when there's so many other sell orders. Now they'll buy back all those contracts being sold up to a certain extent, but when they start bumping heads up against a lot of sell orders at a certain area to where they say, hey, we just can't push the market any further, they'll flush the market in and drive it back short, back going south. Okay, so I can show you, show you things like that where the market did so, but it's like right here towards the close of business yesterday. Not yesterday, only May 8th, the market started driving hard to the upside. Okay, even into the overnight session. Once the market opened back up, okay, what did it do? It couldn't push any lower. It pushed slightly a little lower, and then it started rallying to the upside. Okay, and then it bumped up against an area right here, and above it there was a lot of sell orders. Okay, so the market, and here if you look at the volume profile, the market rallied back up right to the outer edge of this high volume area. Okay, now yes, it could push through this area here. Okay, it could push through this area here, but there's a lot of sell orders that were right here as well. So when the market pushes back up, at some point it's going to push back lower. When I saw this rejection right here taking place at this area right here, what I call a zone, okay, this zone right here, and the market couldn't push any higher. In the overnight session, I saw the rejection. I went short, okay, and you'll see many opportunities like that. Say for instance, like right here. This is why I got this rectangle right here with this this movement to the downside towards the close, 3:30 on May the 5th. What happened? The market pushed back up into the close of the session. Okay, what happened? Market couldn't rally any higher. Gets above a high volume area here. Okay, right above it at the outer edge. And you guys know I like to take my shorts from the outer edge above a high volume area back to the medium and below. Okay, so the market's going to typically, if it gets up here, rejects. Okay, all right. And all this was more likely was the market makers pushing the market back higher towards the close, forcing or stopping out traders. Okay, they had all these sell orders placed on. All right, when they got up here, they saw all this selling right here, and it was like a brick wall, and they were not willing to carry that inventory or pick up that inventory to push the market, further, higher, whatever the case is, to take on that additional risk. So when the market got right here, it was like, okay, we drove the market, to a point. We flushed out individuals, pretty much stopping traders out and collecting money. Now, okay, now we're above a high volume area here, right here, okay? So what they're going to do, naturally speaking, you wait for the rejection in this area, and the market flushes to the downside. It flushes here, okay, the market breaks, starts pulling and pushing lower. It's going, if you look at where price rejected it right here in relation to the volume profile, rejects right here, okay, above a high volume area, and then it pushes all the way back down to this high volume here. So basically, I like to trade from one high volume area to the next high volume area is kind of the golden rule. In a sense, whatever the case is, but that's how I use, I like to use volume profile in my trading, whatever the case is. And everybody has a different style. I'm not saying copy or replicate the way I trade, but that's just how I trade. Okay, guys. So and maybe it's not your style of trader. Maybe you used to like doing breakout trades, whatever the case is. But man, breakout trades are risky. I'm gonna tell you now. If you trade like that, and you taking breakouts, and without taking a trade on the pullback to see if price is going to continue in that direction, you're putting on a lot of risk on the table. And I think that's why a lot of traders take on a lot of drawdowns, because they're not looking for that extra confirmation. They just, market's moving, they're jumping with it, and they're moving with it. If it breaks a certain level or below a low, whatever the case is, they're short in the market. It breaks up above a high, say right above a high volume area, this low volume area sitting right here, and they're looking at certain things, in relation to, I don't know, it just depends on the internet. Some people, nothing wrong with using cumulative delta, because, I add it to my chart, and it's a good tool to use because it is a level 2 indicator, and it does show you the amount of buy and sell orders are hitting the market every single time. But there's a certain, there's that cumulative delta can be manipulated in a sense, and the market makers use that they can manipulate that. The tape can be manipulated to think that to cause traders to think that the market is going to do one thing, and then that's why people get trapped in trades because they look to take a break above a certain high, whatever the case is, of a level. Cumulative delta is going up, and then all of a sudden it stops. It flats line gets exhausted, and it turns back down, and lots of traders are trapped. So that's why I trade supply and demand, because supply and demand to me is just, hey, if the price pushes up here, and this is an area where a lot of selling aggressive, it's simple trading. It's price action. It's just simple, elementary, like principles to trading. Like it's simple. Like I learned a long time ago that if you could trade price action, you could trade. If you could trade price action, pure with nothing else on your charts, then you can trade. And I will tell you right now, you could definitely trade without using any indicators if you understand market structure and price action. I've said that since the beginning of the channel. Okay, but I'm not gonna keep running on, guys, because this is so much that. But we trade however you trade. You guys see me profit in what I do each and every day. It's because of I'm not. I simply just look for I guess the short-term movement is what I'm doing, because I see so many setups throughout the market every day in my style of trading. Now, not everybody may have those same type of opportunities. They may get 1, 2, 3 opportunities a day to capitalize on, and based upon or surrounding their style of trading. Maybe it works, maybe it doesn't work for them, and maybe they don't profit, or whatever the case is. But I see too many people on the internet, especially here on YouTube and different channels, whatever the case is, just taking major drawdowns, and it's just crazy, guys, crazy. But yeah, let's go ahead and jump into the. I'm just rambling on. Let's go ahead and jump into the market and kind of see what it's doing. So I mentioned prices pulling back to this area right here. This right here, I draw it for you. This is an area of supply. You guys don't know, supply demand style trading, whatever the case is. Price broke here, pushed back, and then it broke lower. Okay, so this area right here, you can see it. Simply area of supply, aggressive selling coming out of it. Retrace back, look for an opportunity to go short. Below this area here, price this candle close red. You can go short, but be careful though, because you have this area of support right below you. So you kind of want to make sure that you got clearance to take a trade when price gets to the area of supply and demand. Now, would I be going long into this right here right now? No, because we're in this area of supply right now. I would be looking for opportunities to go short. Okay, so let's see. The market opened up, and let's get a 12 range chart. So right now we're hitting to this area of supply. I'd be interested in taking short entries because right now we are in an area of supply off of the higher time frame. Okay, so let's see. And when you have losing trades, guys, I want to talk about that too. When you have losing trades, I just feel like you shouldn't be in the red each day. Like if you're in the red in multiple days throughout the week, you're doing something wrong. Your strategy is not working correctly. You're basically trading. You're basically taking on. You're trading with a lot of risk because your strategy may work 50% of the time, 60% of the time, whatever the case is. Not with the way I trade. I'm trading 90% or higher every single day, and some days 100%. It's because I'm not taking on that extra risk. For one, I'm not taking breakout trades. Okay, it's what I call breakout trades, chasing the market. Market breaks a higher low, and you're into the market because whatever the case may be. But I don't know. I mean, I'm not here to bash anyone or anyone's style of trade, whatever the case is. It's just, it is what it is. All right, so yeah, prices in this area of supply sitting up here, like I said, and it's rejecting. Okay, so now we're back down to trying to pull back right now. So let's see what's going to happen. I'm trying to take a few trades, hopefully, if not, but yeah, but when you have a losing trade, you just need to know, the moment before you get into that trade, well, even when you get in the trade, let's say you get into the bad trade, or whatever the case is. All right, so this is resistance right here. Price came to it and bounced. I mean, excuse me, support, and it bounces. It's bouncing right here. You get to a loser, you get to a trade. Trade comes back against you. The moment it comes back against you, before you even get to trade, you should know where to get out at. Okay, and do not carry on any more loss. The market comes back to that area where you enter that trade at, and I've shown this in so many videos, guys. There's always a supporting swing that you should be taking your retracement trade back to. Okay, and the price on a buy entry when you're going long, and the price comes back to that area, then you should know, or breaks below that area. And I've shown this in so many videos. I think you guys need, a lot of people need to go back and watch some of the videos. But you really need to know where to execute your exit out of the market the moment price doesn't work out. It comes back against you. You should also know the moment you get to a trade where price is going to go to. And you see me say that in every one of my trades, just about price is going to go here. And it does every single time. Just about, at least 95% of the time, whatever the case is. But a lot of times, the thing about it is managing your trade, knowing where to get out the moment it comes back against you, and do not allow it to come back against you any further. Okay, that is controlling risk management. Okay, knowing where to take your profit and being comfortable, even if you got 3 contracts on, knowing where to execute or to get out on at least those 2 contracts and let your last contract be running. Okay, now that's something I'm working on. I'm missing, a few more points when I get into a trade, whatever the case is. I close out, whatever the case is. I profit every day, but the thing about it is that I get out of a trade a little too early to where I may be able to pick up another point or 2, whatever the case is, And that's just the nature of trading. You can't catch it all. But what I'm working on for myself is allowing my last contract to working on trying to manage my last contract and allowing it to run pretty much. But yeah, knowing where to get out. Before you get into a trade, you should already know where to get out at. If when you say, hey, this is the zone, this is the level I want to trade at, you should know when price starts projecting. You should know exactly where your stops to be, whether you have a hard or mental stop, whatever the case is. So that's the thing about trading and knowing where to execute or take profit at. So I'll show that in a couple of videos. Hopefully I can give you an example here in this video here, and what to do to kind of avoid a losing trade. We'll leave it like that. Even if what to do to try to avoid a losing trade. Okay, you may get to a trade, you may take a bad trade, like I said, and then it comes back against you. Get out, and I'll show you those areas where you need to get out. Okay. All right, the market's pushing higher. So it broke above this area here, so we'll take that zone out now, because now it is no longer valid, right? Because the price broke above this area. So let's see. All right, now here's another small little area of supply sitting right here. Within this swing to the downside right here, there's an area where this purple line is right here, somewhere around 39.57, 39.58. Price is kind of pausing right there, rejecting it. So we'll look at our higher time, our 12 range chart, to see if price is going to start pushing lower. And so far what we see is price is pushing lower, but this is kind of what this is what is called like a V-shaped reversal. In a sense, a V-shape. Price is just, it pushed higher, it turned, and now it's just pushing hard to the downside. So without any without any pullbacks. Okay, look at it, see it. So let me take a look here to see. Come on. So you see the price pushed down here, a little higher time frame pull back. See that area? Price rejected it right there. All right. So price breaks below. Let's see. Price gonna break below this area here. 39.46. The price pulled back to this area here, rejected it because that's an area of supply, pushes lower. Now it's retracing back to that same area, and it could break higher and come up and test the high up here. So we'll see. I know I'm doing a lot more talking in this video than actually trading, guys, but you know, I'm patient in my style of trading. I just don't jump into anything without getting confirmation. So let's see. But yeah, let's see here. Oh man, let's see what price is doing here. Tap into this area right here. Pay attention here. Pay attention, pay attention. So it's pulling back to this area right here of demand sitting right here. Where this purple line is at. Okay. It's tapped into. Okay. Let's see. All right, so price is breaking through this area right here. Yeah, okay, now we have, I'm going to delete this right here. This price is okay. I'm going, I'm late, guys. I'm late. I'm going to trade. Very late. I'm late. Okay, come on, push up. Okay, first contract, hit the second contract. There we go, second contract filled. Okay, this area right here is an area of supply, excuse me, demand sitting right here. Show you guys this. Let's see, price pushed up. Pull this back. This area right here is okay, an area of demand sitting right there. You see all this aggressive buying coming out of this area right here, and then price comes back to it. So, all right. So we'll see. Yeah. Okay. This area right here. So, price could actually on the 60 range chart could. Let's see. It could come lower. Test this area right in here, right below this high volume area here at 25, and then maybe get some rejection. I'm not sure, but we'll see. But right now we are sitting at 37. Yeah, 37, 39, 37 price area. Price is hitting in this area right here. So let's see. I'm short. Actually, I'm going to move this a little lower because I'm pretty sure it's going to come down lower. Come on. Should come lower. Come on. I'm looking for it to push lower here. Come down here and test. Oh, come on. Yeah. Okay, there we go. All right. Exiting my last contract down here. See how I let it run down here? All right. So that gives us, that's a 12, 26 ticks right now. Okay, we're down here, this area here. Back down to this area of demand sitting right here. So, yeah, it could break lower. So, but it has to stay above this area here at 40 if it wants to. and it's already broke down. So it's already made low here, retrace and push down lower. So all right, let's see. Okay. All right. Let's see where we at. Broke this area now, so we'll just leave that there though, just in case we want to. Yeah, I need to see price break below this area. We have resistance right here in this area, so we have to be careful with that. I'm gonna take a little scalp though to the upside. Okay, I'll buy one. Come on. Okay. Show you what I'm doing here. Come on, push up. Let's just take out right here. There we go. Okay, get filled back to the top here. The entry was right here though. This was your entry and your pullback. So I'll use this as an example. Let's see here. Okay, up 35 ticks right now. Price it's down in this area right here, so I was really looking for it to close above this red line right here. All right, I'm going to use this as an example, just kind of an example I was talking about, you know, how to really avoid a losing trade once you're into the market. So you saw price retrace back to this area. I'm going to mark the zone right here, this area right here, okay? Price pulls back to it, taps into it, okay? Really, I want to see price stay above 39, 36, but if we look at the 4-range chart, all right, see this little zipping right here, this little W formation, all right, price zips, breaks above, and you can actually take a long entry here back to this area right here, but be careful here because this is a small micro range, I call it micro level, where there was some little bit of selling that came out of this area right here, but price pushes back up to it. It actually takes this little level here out, okay? So when I see this type of thing happen right here, all right, price taps back into the zone on the 12 range. To me, this is a 12 range demand zone, I call it, okay? All right, price retraces right back to it, okay? When it taps back into it, I'm looking at my 4-range chart, all right? The zipping that takes place here, price broke up, and it actually took out on the way up where it pushed up, pulled back, and it just broke higher, and it took this level out. If it took this level out, this is where you can look for retracement back to this area right here, okay? So the moment I see this zipping right here and price break back above, okay, and actually taking this little level right here out, my stop, okay, on a pullback, okay? When I saw this happen right here, that's why I went long, you know, pretty much. I went long a little early, but I scaled in with another contract right here because I saw price. Oh, I saw what price did. It came right here, it zipped around, broke higher, broke above this level here. So I knew it took out this level, so it's got to come back and test it. It's going to come back and test this area here. When it came back on a retracement to this area right here, I said, okay, this is an opportunity to scale in to cover the contract or cover my position in a sense. And one thing I did not want to see is this is how you avoid the losing trade. You do not want to see price break below. This is where your stop should be at, right here below this swing. Okay, this is the supporting swing I was talking about. Price developed a supporting swing right here that took out this little level to the upside when it pushed higher, took it out. On a pullback, you can look for the entry to go long the moment you get this green candle. Now, price comes back below this area here. Let's say you got into the position, right? You got into the position, and for any reason, price turned back around and broke back below this little supporting swing, close your position. That's going to help minimize your trade versus allowing you to stay in it and then try to, you know, start taking major drawdown. You don't want to do that. You have to know the moment you get in where to get out of. That's why the moment I did get in here and I took that retracement, that I scaled in on that retracement back to this area right here, I knew exactly price. I need to get out right here. Okay, so you need to know where to get out at, and you know, as far as on stop loss, look at your stop loss, where to place your stop loss at, and where to get out at as far as profiting. Okay, those two things you have to have in mind the moment you get into a trade. My stop loss is right here. Okay, I'm in the trade right here to cover pretty much. I actually got into the trade right here. Okay, and where I really should have waited was for the close of the green candle to the upside here on the 12 range. It didn't happen. But when I started, I noticed this on the 4 range chart. Like I said, price. I'm trying to say here, guys. Went sideways right here, pretty much forming this little W right here. Okay, creating this area of support and broke higher, taking out this little micro swing here. I knew that right here, price is going to come back to here. If I were taking the retracement back down to this area right here, green candle form, I'm going long. My exit or my stop is right here. My exit for profit is right here. You have to know those two things. Okay, whether it's you putting a hard stop or a mental stop. Okay, all right. So I think a lot of people are just so used to watching other people trade and they place their stop so far above or so far below wherever they get into, and that's how you catch major drawdown. And you don't want to do that. If you're following people who are doing that, guys, then you're not learning the right way. I'm gonna be honest with you. I'm not saying they're not profitable, but they're taking on a lot of risk just to make a little bit of profit, or to make some profit, I should say. But you got to kind of do your risk management thing. Like, is it worth me taking on a lot of drawdown just to try to and then try to recover that from that drawdown by staying in a trade and hoping that it's going back up? At that point, when you start taking on major drawdown and the market's so far against you, at that point you're just you're taking just too much risk on, and you are playing. Let's see. Hold on 1 second. You're playing Russian roulette. I see guys 2, 3, 4, 5,000, 6,000 account drawdown on a trade, and it's like, why did you allow yourself to take that much drawdown? Why not just exit the moment why not have a plan to know where you got it, once you got into that trade, where you exactly need to get out of that trade at? My exit would have been right here. Price breaks below 39, 33. I'm getting out. I'm regardless if I got in right here, I already knew my exit was right here. Okay? But when I saw price do this, what it did, break above this little swing right here and retrace back, I said, oh, okay, this is going to be a retracement trade to scale in, to cover to cover where I went high, to cover where I entered too early at, and that's what I did. Okay? My stop was still here, but I took profit here on the retracement. So price did this number right here. It pushed up, broke above this swing right here. On a pullback, I said, okay, it cleared this area right here. Check out this swing. On a pullback, I'm going long with this candle here. Closes green to the upside. It did. Take it right back to this area here. You get in right here. That is 34.5. Take it up to this area right here. It's 36.5. That's 2 points right there. All right. Let's see. Moving on. Let's see what we have on the. What am I up now? I'm up 35 ticks. Okay. I think I already showed that. So I'll see about taking one more little trade and then I'm done. Let's see. Yeah, so guys, I'm simply going to say that if you are following someone or watching a channel to where they are taking major drawdowns and on trades, just think about it to yourself. What sense does it make for someone to take on that much drawdown? Do they really know what they're doing? Ask yourself that. Because they should already have told you, or you should already know. They should have shown you examples, and I show you those examples, guys. Those type of examples over and over and over. I say this is where you need to get out at for your profit, or this is where I'm gonna get out at. Because you see me, I pinpoint every single time. The moment I get into a trade, what do you guys see? I say price is gonna go. I tell you exactly to where price is gonna go here. Price is gonna go here. And I take profit there, and I'll also show you where I've shown this in many videos. People always ask me, well, I don't really see you put a stop loss. Where do you put your stop loss at? And I've covered that in many, many, many videos, where to place a stop loss at. And that's right behind if you're going long a support and swing from the moment you get into a trade. So, like right here, I just said that's a support and swing right there. I don't want to see price break below that area. If I go long here, I don't want to see price break below this area. Okay? If I go long with the retracement, I don't want to see price break below this area. All right, let's take a look and see what the market's doing now. All right, let's see. Okay. All right, we saw price reject this area right here, but it's like it's still trying to push lower. So let's trace this. Trace. Yeah, you got resistance right here, so be careful. All right, still trying to push lower. All right. Yeah. Even if price clears this area, I won't have too much area to really trade from, so I'm not going to trade this going long in any kind of way. Yeah, see, I knew price was going to do that right there. Yeah, so I'll just wait here because price can reject this area. All right. Yep. Let's see. Price pulls back and rejects this area. Okay, maybe it's going to break higher. I'm not sure. Yeah, okay. All right. Just be careful. Just going to wait it out here, see what price does. I need to break below that purple line though. Okay, it did. Okay, I'm going short. Come on. I'm short early though. So, why'd I do that? Okay, 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 okay. Come on. Yeah, I went short, way too early. Cover this trade. Come on. All right. Okay. I just took the short way too early, guys, there. Okay. Yeah, I mentioned price break below this area right here was coming out to the lows. Yeah, it just pulled back um, to the top end of the swing right here. It didn't break above it, but yeah. Yes, sir. Let's see. Hmm. Yeah. Yep. Yep. Okay, went short again here, right here. But yeah, it broke below that purple line. You can go short. I knew that. It's okay. All right, moving sideways right now. It's high volume area here. Where's the Deepak at? It's down here. It could shift up here. We start building some volume right here. The volume point of control will shift up. So, all right. Mm-hmm. Then break this area here. Price probably gonna push higher now. Yep. All right. Let's see. Um. Yeah. Marking this stay below this area here, and it is doing that. Okay, maybe I'm gonna pull back to this area right here. Let's see what happens. Oh no, it actually took that area out though. I'm going long, I'm short. Come on. Come on. Quick little scalp right here. Come on, break lower. Look at that. Hit the first contract. There we go. Okay. Market just fitted around right there, going sideways. But all right, so I think that's gonna be my last trade for the day, guys. This thing wants to cooperate with me, right? Just picking up quick 5 ticks right there. So we're 47 ticks. Okay. Yeah, 47 ticks. This area right here. Let's see. This area right here. I'm marking for you. It's an area of demand. Let me see the supply sitting right. I guess I cover it like this. This area right here. And you want to see price stay below that or break below that. So basically you can go short when you see price tap into the zone right here at this break of that red candle right there. You can go short. Simple as that. I mean, I'm not saying price can't push a little higher, but you need to look over your 4-range chart too to see if you're getting the rejection off the 4-range. Just the same. Shoot. Oh man. Let's see what the market's gonna do here. Broke below here, so just broke below here, so we're probably gonna push lower. Actually, let's see. Hitting this area down here again. So, look at that. Okay. Yeah. Yeah. Price is trading within this leg right here on this swing to the upside. So it's bouncing off this area over here. Okay. Let's see what happens right here. Be careful because you have this high right here and you have resistance right there. So yeah. This was a long right here. Could have went long right here, just back up to this area right here. Price will trace, take it long again, back up to this area right here. But be careful in this area right here. Got a high volume area here. You can see it. You can see the high volume area here on the 12 range as well. If we break up here, break this area here, and pull back, I'll go long. But it looks like we're kind of moving sideways right now. So we got a low here, high here. We're wedging in this area. Be careful. We're wedging right here, just like this. We may try to break lower now, but let's see. But I think I'm going to be done for today with my trading for right now. Let's blow this 12 range chart up and see what we got. This yellow line you guys see here, that's just the VWAP. I don't even really use it in my trading. Some people do. On pure price action trader, guys, I just use price, pure supply and demand, and I just use price action. Follow price action, and I like to see price tap into supply and demand zones and look for the rejection. See if prices will reject that area, and then take trades on the pullbacks or retracements. And I like to see each volume profile as kind of confirmation to see where it's at zone wise in relation to the areas I'm interested in going either long or short at in relation to my zones. Yeah, I don't know about this area here. Come on. Price tapping into this area. This area here. This is an area of demand. The price came back and we traced back to bounce here, pushed up, bounce, bounce, hitting it again. It's bouncing again. Okay. So let's see what happens. And I want to see it stay above. Oh man, let's see. Hold on a second. Yeah, we can break lower. You hit this area once at 1020, 1033, 1045. Now we're hitting this area again. Probably gonna break it and push lower though, but looks like it. We're hitting it again here, 1145. So let's see. You know, it's gonna have to break above 39.15 for me to even want to even entertain it. Where that purple line is at. I'm not sure if it's going to do that or not. If it breaks that, we got resistance right above us anyway, so that'd be kind of calling it close. Mm. Yeah, look at that, blasting lower. All right, took this level here out, breaking through this low volume area. I don't know about this area here. Looks like the market is low. I better trade like this. Okay. Come on, go up. First contract, second contract, boom, boom, that quick, okay? All right, so come back to this area right here. Little swing right here, little area of resistance. Let's see. And what did I say? We have 47. That trade there picked up 11 ticks there. All right, so that's 58 ticks right now. Okay, 58 ticks. Not bad. All right, guys. That's gonna do it today. So I appreciate everyone who's tuned into the channel, guys, and viewing and watching the channel. Um, that's just how I trade. You know, I trade supply and demand. I like trading it. To me, it's the best way to trade. I feel like you get the most out of it. The best opportunity, when it comes to trading, and it doesn't allow me to incur lots of drawdown. That's just crazy. So a lot of people on the channel, they do that. They trade live, whatever the case is, take on a lot of drawdown, and then they they jump off because they're probably upset with losing that kind of money, and then they go hide somewhere for a while. So I don't want to see you guys do that. So I mean, I'm not saying you got to follow the way I trade, but the way I trade is, I guess I'm trying to look for the right word to say it. It just helps protect your trading. It lowers the amount of risk that you put on the table. And to me, it's just like just so many opportunities to trade and using this style of trading. Okay, and you're not tracing the market. You know, a lot of people I see that they get into a trade and then all they want to show is like they'll have this big major drawdown when they have a major loss, and then they want to follow up like a day or two later and show that they made all this money back. It's like, man, how much money did you make? Did you actually break even in a week? Did you even make any money during a week? So that's the kind of things that I struggle when I see people trading and chasing the market, taking breakout trades when they see price breaking a level to the downside or to the upside, they jump into it. I mean, I don't know. My strategy works for me. That's all I can say. Okay. So outside of that, let's see. All right, looks like we're dumping low to the low of the session here. Testing the lows. Looks like that's what we're doing here. So made a low right here. Price broke up. Yeah, we could come down here and test. We are hitting off of it right now. This is an area. Let's see. Give me 1 second. Let's see. Yeah, this is an area of demand right here, off the 60 range. So how would you trade that? How would you trade that, guys? Let me know. Tell me what you would do. We're in the area of demand now. Leave a comment below and let me know what you guys would actually do now that we're hitting off of the area of demand off the higher time frame. What would you do? Me, I'm waiting now. I see this. I say, okay, I want to start to see price break structure, start breaking structure back to the upside and making structure, maybe making higher highs and higher lows, breaking back into this structure here, looking for the retracement to go long. I do not want to be taking shorts into an area of demand. Okay, I want to be taking longs. I want to be looking for areas of opportunities to go long. Okay, all right. So, I think what I'm going to do, guys, is I know we had the poll going about the chart settings, chart layouts, workspace environment, things like that. I think what I'm going to do is I'm going to just do a video, and I've done this in the past, but I think I'm going to be a little more detailed with it. I'm going to do a video that's basically going to give you chart by chart. I'm going to go into detail on each one of the charts, like the 60 range, 24 range, 12 range, and the 4 range. I'm just going to show you, going into detail. We'll talk about the chart settings and what you need. You know, each one of the charts, pretty much. I mean, you know, I guess you can use the same charts as I have, you know, as far as like the workspace environment, the the chart settings, whatever the case is. The only thing is like the disco trading volume profile, that range volume profile. You know, there's a lot of there's certain settings that you're gonna have to turn off, well, not turn on, turn off, but make adjustments to. I guess people. I don't want to see individuals kind of get so, I guess, involved with mirroring the same charts that I actually use. So what I'll do is that if you choose to kind of trade the same charts, I just thought about it, and I see some people, it's about a 50-50 interest type thing. You know, some people don't really may not have interest in the actual chart settings because they trade their own charts. You know, they have their own settings, whatever the case is, and maybe they're tweaking it around some of my settings, whatever the case is. But what I've chosen to do is just do a video showing you the chart settings or going back over the chart settings again. And I can show you the chart settings or the volume profile settings that I have my volume profile set to, or the disco trading volume profile set to, that I have, you know, loaded to my charts. I can show you, you know, just everything as a whole, and I'll do that. We'll go through the 60 range, the 24 range, the 12, and then the 4 range. I'll do a video. So I'm not going to go about charging a fee just for the chart settings and the workspace environment. I just said, you know, I'm just going to put it out there in a video and let you guys choose if you want to be able to kind of mirror the same settings or mirror the same settings when it comes to chart settings, and you know, the layout and into the volume profile settings as well. Because really, honestly, all I use is just I follow pure price action, and I use volume profile to kind of help me with my trading or whatever the case is. And that's pretty much it, though. I'm just going to do a video surrounding that to make it short, sweet, and simple for everybody. You know, if you choose to use the same settings, you can. If not, that's fine. You know, because maybe you trade the way maybe you have your own settings and a setup. Maybe you're using a different maybe not using 60 range charts. Maybe you're using the same strategy, but maybe you're using time-based charts, whatever the case is, or volume-based charts, or tick-based charts, or whatever it is, or wrinkle-style charts. It doesn't matter, but maybe you're just using the same strategy. So, for all those that are maybe wanting to just replicate what I have, the video will probably be more so for you guys, and I'll go into the settings more so in detail, chart by chart, including the volume profile as well. So I'll just leave it like that, okay? We'll do that and not set up anything to where I kind of thought about it. I said, I'm not going to do that. It's just, I just it's part of the trading community here on the channel. I'm just going to make a video and just covering that information. So I'm not even going to put it into a file to where you can, just upload it to your folders, whatever the case is. And I think a video surrounding it to where you can have a step-by-step guide and look at the actual settings themselves for each chart, which is basically, I'll go in detail about that. We'll walk through each chart, show the chart settings and volume profile. If you have any questions about any of the settings, you can always send me an email. I'm not email, but leave me a comment or whatever the case is on the channel. And I don't have the emails, set up because I don't have the time to be answering emails all day long, guys. I know that I'll get millions of emails, and I'm making these videos for free. They're more for informational type, more information than anything. I just wanted to put the content out there. Like I said, it was never my idea of making these videos public, as far as making it public to where people would comment or respond to, because you guys know, even at first I had comments turned off. I wasn't interested in that type thing of building so much a community surrounding my style of trading. Was more so me wanting to record trades or put them in a workspace environment or cloud-based environment to where I can go back to and easy access them easily. So then I turned the videos on to be public, and I think that's when people started getting interested in the way or style I trade. So it is what it is. At this point here, yeah, it'd be nice to see the channel grow, and I'm glad to see, because I get tons of comments and feedback from individuals on the channel saying that they're learned a lot and continue to learn, and they're practicing using the strategy. And a lot of people say that I'm green. I've been green for a week now, whatever the case is, and I'm glad to hear that, because that's the key. It's being green every day. It's not being green one day, red the next day, green the next day. Back and forth, back and forth. I think if you take this seriously and you are a straight up professional, not professional, but you become experienced, you should be, profiting every day. I mean, this is a business. If you treat it as a business, some people maybe have another means of income, whatever the case is, and they're like, okay, well, yep, today was a bad day. Didn't make any money or lost money. Tomorrow's another day. I don't take it. I don't look at it from that standpoint at all. Okay, so I hope you guys understand that. All right, that's it. All I have for you today. I'll see you guys in the next video. And if you're trading, please be safe in the market.